The Morgan Report with David Morgan.
David Morgan of themorganreport.com. It is 17th of September 2021, Friday, and this is the Weekly Perspective. So I will start with the stock market as I usually do. Lots in the news, particularly surrounding the Evergrande. Largest real estate holdings in China is our understanding. Lots of debt can't be serviced, and it is causing problems in the financial system. Will it spill over into the United States and other arenas? Of course it will. So, as a consequence, the stock market has sold off somewhat, and basis the S&P, which I think is the best way to look at the overall U.S. stock market. It's sitting right on the 50-day moving average and has been holding above that for the last 4 trading sessions or so. And I'm doing this late in the day, so market's fallen off, but really hasn't even pierced the 50-day moving average. So it's holding very strong, really, for what the potential outcome of this Evergrande situation is. For the week, it's been weak metals prices. Gold has gone from roughly the 1800 level down to almost the 1750 level. So a big whack of about $50 again in round numbers. And of course, this has caused a lot of second guessing amongst the precious metals community. And as for silver, percentage-wise, even worse. And we've seen silver from roughly the, nearly $24 level all the way down into a 22 handle, which we're at as I do this perspective. So again, the precious metals community, the miners as well, are not looking strong as we speak. Is this it or not? No one knows. I suspect it is, but time will tell. Fundamentals, of course, have done nothing but get stronger. Why the big sell-off? Well, we'd have to interview everyone that sold. Most of it's paper selling. There isn't much in the physical realm that's actually being sold here. But what is happening is the gold-silver space is about the most liquid asset class that exists. And because of that, when you need to raise cash quickly, selling off your quote-unquote gold holdings is pretty easy to do. And because of that, a lot of selling pressure. And, of course, that causes the price to go lower. This is an article, and a good one at that, of twominds.com by Charles Hughes Smith, which we just had on our September Mastermind series. Think a great deal of Charles. I won't read the whole article. This is for your weekend reading. It's not very long, but as always, I really do admire the way this gentleman thinks. Ministry of manipulation. No wonder trust and credibility have been lost. Here's America in a nutshell. We no longer solve problems. We manipulate the narrative and then declare the problem has been solved. Think about that. Actually, solving problems is difficult and generally requires sacrifices that are proportionate to one's wealth and power. And since America's elite are no longer willing to sacrifice any of their vast power for the common good, sacrifice is out in America unless it can be dumped on wage earners. But unfortunately for America's elite, 4 decades of hidden by manipulation sacrifices have strip-mined average wage earners, and so they no longer have anything left to sacrifice. And I'll just add on to that, again, read the article maybe twice, pass it on. You know, it's the idea of what happened with the banking system during the 2008 financial crisis. In a true free market system, the banks that made bad loans would fail, and they'd be liquidated at whatever price or go totally bankrupt and be gone. And then we would work our way through it. But no, some banks were let go and some were rescued at the expense of the wage earners, the taxpayers. It wasn't the government that bailed them out. The government was just the agent that took future earnings from those working to pay off the banking system to keep them afloat. So I think most people that follow me are certainly well aware of that fact, but many people out there in the general public thinks that the government did something. No, they just were a middleman or middle woman, a middle person, an entity that basically, as I've said, quoting Harry Brown, it's government is force. They force you to bail out a banking system or banks that you have no association with, maybe, that are, and you're required to keep working, and some of your earnings are used to reward failure. This is one I've been asked on my Twitter account over and over, so I suggest you just Google it, Biden's tax plan gives the IRS more access to your bank account. And I've got a couple Twitter people that have asked me if true or not. You can just go here to, again, Google that in. Basically what it says is the administration is aiming to bolster the IRS for adding bank reporting requirements. Under the proposal, the financial institutions would be required to annually report customer inflows and outflows of $600 or more. Sounds pretty low, but with computers, they could do it. I'm not that concerned about it. I just want to state of the facts. That would be a fact if this thing is implemented. But it's sort of like the NSA listening to every phone call and every message that you send. They get all that data and they store it in Utah in a huge building on all these servers, all these computers, storage, memories. But how much are they going to use? And the answer is not very much unless, you are flagged or your company is flagged or whatever. So the data may be there, but are they going to sit there and scrutinize every single one? Probably not. So is it an issue? It could be. I'm not all that concerned about it. This article goes on to say, imagine a taxpayer, he reports $10,000 in income, but has $1 million in flows in and out of their bank account. The administration sent a memo to congressional Democrats this week having the summary information will help flag when high-income people underreport their income. Well, what if you have $10 million in savings and you're retired, you have zero income, and you spend $1 million? So how do they discriminate between those two? Well, they'd have to go to the records and see if you're still reporting or, whatever. But I won't go into the minutia here. I'll leave it at that. And Reuters reports this U.S. debt ceiling impasse, Fed's loathsome game plan for the unthinkable. Of course, Grandma Yellen there, who used to be head of the Fed, now at the Treasury, Secretary Yellen, says failure to raise the U.S. debt limit could lead to the unthinkable, a default on government payment obligations. Well, let's think about this for a moment. This would be an official default. But if the government keeps paying you back in paper that's worth less and worth less and worth less than the paper that was than the loan, let's say, that you made with government debt, are you really getting paid back or are you defaulting on it? In other words, if I loan you $10 and I get paid back value of 10, but it's only worth 8, have I been defaulted on? Not officially. But in reality, I have been. So this almost is laughable to someone like me and probably most that follow me. The debt limit could lead to the unthinkable, a default on government payment obligations. Well, you've been defaulting by debasing the currency basically from the inception of the Fed. It's just starting to accelerate again to the point where most Americans have woken up to the fact and starting to question what's going on. So I won't read it anymore. We all know that this debt limit's happened over and over and over and over, and it always gets extended out. Will it happen this time? Probably will. Will there be a bunch of political stances and rhetoric and back and forth and a bunch of mainstream fake news that talks about this over and over again and makes it into a big deal when it really isn't? Yeah. Could it trigger something? Could you move too much money one way or not enough or something like that? Yes, there always remains that black swan possibility, and that's why we've been hedged for so long, because we know it's inevitable at some point. Will this be the trigger point? I doubt it. And I think I'll leave out or leave the last article here at the Real Investment Advice website, MacroView. Deficit Deniers and 40 Years of Economic Erosion. Another good one for you to read. You can look at it here. The belief that debt and deficits don't matter primarily stems from the basis the economy hasn't collapsed and become the historical equivalent of Weimar Germany. However, the rather elementary view fails to distinguish that dropping a frog into boiling water or slowly bringing the water to a boil equates to the same outcome. The latter just takes longer to get there. So Barry Reinhold's entitled Time to Stop Believing the Deficit Bullshit is an interesting read. You can go through the whole thing. I think it's well worth your time, especially for market students. Lots of great graphs in this. And I think, again, that for anyone that's new or anyone that's old, meaning to the subject matter, could either refresh their memory or dive in and get a pretty good view. And look at, you can just tell from, just be scrolling through here. You see these ups and downs like all markets. Then you see the sharp move down here on the federal surplus versus deficit. And this one, the producer price index inflation. And they just see these big spikes. When you see big spikes like this in whatever the asset class, a commodity, a stock, real estate, truck prices, garbanzo beans, I don't care. When you see a spike like that, that's trouble. Something is not right. That's a huge anomaly. And of course, it's many ways of measuring this, as you can see in this article. The point is, from my perspective, this isn't going to last a whole lot longer. So I'll leave it there. It's great to be back in my hometown. I made a trip all the way to the Bay Area and back for personal reasons. It was a great trip, but always good to come home. I'll be back with you next week with another weekly perspective. And remember, there is nothing more powerful than the truth. And the truth usually comes out. And it's the old adage, the truth hurts. Yeah, sometimes. Really, the truth without love is brutality. In other words, the harsh reality, the harsh truth, or the brutal truth, and all these associations we have, it doesn't have to be that way at all. The truth is the truth, whether you recognize it or not. It marches on majestically all by itself. And the connotation can just be objective. It doesn't have to be brutal. It doesn't have to be harsh. It doesn't have to be hurtful. But if you are professing truth to somebody and you know it's an objective truth, not a subjective truth, it's not just your truth, it's the ultimate truth, to do that in a compassionate way. I mean, you can be brutally honest or you can be honest with love. And I would choose the latter in every case that you possibly can. So I'll leave it there for this week. My best to all of you. I'll be back again, as I said, next week with another weekly perspective.